Hey guys, welcome back. Okay, this is part of a multi-series of videos. If you haven't looked at the others, I urge you to go back and check these out. It's a mini-series. And if you like this kind of thing, please hit the like button because we'll do more of this kind of content. If you don't like it, fair enough. Keep subscribing anyway. Keep looking back because we change things up all again. So subscribe, like, do all those good things. And if you want to write some comments, I'll be reading them later on. So let's move on to the next part. And what I've got in my MacBook here is we talked about the air of panic. So if we sort of switched that up a little bit and said, all right, what are people feeling under these conditions? So we had that big drive down in the last video. What are people feeling under these conditions? What are they feeling there? What do I put here? They're not feeling anything. There's no institutional money flow coming in. This could be over a month. This could be over a year. This could be over a day. What's happening here? Absolutely nothing. No institutional money. We're ping-ponging back and forth. We could break down to the down. We could push back down to the downside. We could push to the highs. No retail trader is particularly trapped in this. It's not like, we've pushed lower here and we've spiked higher. It's kind of no man's land, right? And I know some of you are saying, well, this is a really good range to be trading. Yes, it is, but I'm just going back to the point of what my edge was and recognizing that, yes, this is kind of the key to it. Yes, there is probably a strategy you can employ if you want to during different conditions. You say, well, this is range bound. I can employ a range bound strategy. Of course you can. But for me, my edge was always and is always now volatility expansion, institutional order flow, people panicking. That doesn't represent that to me. So I would not get involved in that. And let me flip it on its head. If your edge is trading when it's all calm and there's no, you think that you can predict the next movement here, then fine. But I don't think, if you think about this carefully, it doesn't take much for someone to come in and break that out, right? And this is where I think a lot of people confuse things and get themselves messed up. And I'm guilty of it myself. I've done this. I've been here. I've done this kind of thing before. You look at this low volume environment, wherever it may be, whether it is over a month, whether it's over a day, or whatever, and you kind of try and analyze patterns and you try and say, listen, this thing's breaking out now. It's a breakout. But, what force has been required to make that thing break out of there? Hardly anything. Probably you, me, a group of other guys trading a handful of lots each could have pushed that thing out of there, depending on what market it is, obviously. Does that mean that it's a genuine breakout? Does that mean it's going to continue? Probably not. It takes one medium-sized institution just to put it straight back into here. It's a different scenario. It's a different scenario than if it was really trending and really thin. I mean, I don't think I can predict at this point whether that's a fake out or a breakout. You may say, well, it is a breakout because it's broken out the range. But my argument would be, yeah, but what has caused that to break out the range? If we've had a news catalyst and there's been some sort of additional influence and it's obviously the institutional flow of money or whatever, fine. But my argument would be, I can't predict what's going to happen here because nobody's really caught in it. Everyone's kind of gone long. All the traditional textbooks are saying, listen, if you're short here, your stop's above here. And if you're long here, your kind of target's above here looking for breakout. So no one's really caught out in this. But let me just add something else. Let me just add an extra layer onto this and see what you think about this one. So that's kind of the scenario now. But now what happens? We do this, right? I've waited patiently. I've thought, I don't know what's going to happen here, but now I've seen this. We've not only gone down back into the channel, but very, very quickly, we've accelerated to the downside of the channel and we're now doing some work. Where did I put the red pen? Forget it, I've lost it. Let's go green. We're now doing some work in this lower part, which we haven't done in a while. Now, what is that? Why is that different to that? Because in my eyes, we are now trapping anybody involved here potentially, and we have kind of advertised of a fresh price at new highs. We haven't got any interest up there, and we've driven lower. So it's giving. This is the extra step or the extra layer or the extra sort of pattern, i.e. from here onwards, is giving us far more an indication as to what's going on and is allowing me and you to predict a little bit better as to where the next likely price is. In other words, from here, from a breakthrough here, what is the next likely move? Because it's the second break, because we've already advertised for longs up here and we haven't got it, but yet sellers have hit it, we've come straight down aggressively. We know there are a lot of people trapped. We know that standard sort of textbook rules say come out below the thing, below the range support. The next likely move is going to be lower, because of all those compounded things. Again, going back to the initial reason, where is my edge? My edge is when retail traders are trapped, or I've got institutional order flow. Probably not institutional order flow here. My guess is that the retail traders are trapped. And we have the compound of those guys trapped long here and the compound of people going short on the break for me to say, okay, I probably would be front running this. If there's enough momentum coming into that low, thinking I'm going to front run this, I'm going to come out into the stops as the cascade of panic comes in and really capture that move. So again, it comes down to the point of recognizing your edge, understanding when you want to employ it, and then asking yourself that crucial question, which is, when I go short, who is going to sell it? And what reason are they going to sell it after me so I can make money? And my reason in this example is trapped, standard strategy stuff, combination of the two, the fact that we've advertised for buyers up here, give me an underlying kind of pulse of the market is that buyers aren't really that interested in this and they're not keen to chase anything. Means that they're probably not going to be that urgent down here anyway. So maybe the sellers are more in control here. Maybe the sellers are more aggressive. Is it going to work all the time? Who knows? You don't know. But the point is, if that's your edge, that's what you're waiting for. And going one step further is that you're not trying to guess this area, which for me was always, hey, I don't know what's going to happen here. However, when we get the next layer of stuff, i.e. this, which we may never get, we may just carry on moving, or we may just kind of sit over here, that's fine. But if we do get this after that, it changes the scenario and the dynamics of the whole thing for me. Okay, so let's just move on, guys. I'm going to wrap it up now. Next video, I'm going to talk about the whole thing, putting the whole thing together, the summary, how we can kind of make some money out of this strategy and how maybe we can use it going forward with the next trading. If you like this kind of video, hit the like button, of course, subscribe as usual. I've probably already mentioned it, but worth another shot.